Many people ask, what can I invest in and how can I detect a bad investment from the good investment? Well, in this video, I'm going to show you 6 signs or 6 ways on how you can detect a bad investment and also what and what you can actually invest your money in. So let's check it out and follow me. Number one, don't invest in the company, invest in the people. What do I mean? Many of us, whenever we want to invest, we check at the company that are doing well against the one that are not doing well. Well, it's not all bad. You are still doing the right thing. But also, you must learn that the company itself is not what will give you the return on the investment. It is the people that runs the company. So sometimes you can do your due diligence to check the kind of people, the kind of leader, the kind of vision they have in that company, and that will shows that you have a guarantee your return. When the people who are working in the company, the leaders, they have a good vision, they have a good idea, then your investment is in safe hand. So beyond the face value of a company, also learn to invest in the people, and or let me say invest in the company because of the people that runs the company. Number two, don't invest in net worth, invest in growth. There are major mistakes that people make when they want to invest. What they want, when they try to check on Google or ChatGPT or all those things, is to check the net worth of a company. Well, it's not all bad, but what you should check in a company is the potential of growth or their growth process. When you want to invest or put your money in any stock or anything that yield a return for you, one of the things you must check is growth. Don't invest because of net worth, invest because of growth. Why? Because there are some companies that they do not have the net worth you're looking for, but potentially in the next 3, 4, 5, 7, 10 years, they are going to have the growth of the current net worth of the people you are running after. So sometimes a company may start 2 years ago, but they have a growth that you can trust in. Better put your money in that kind of company than just looking at their net worth. Sometimes a company can have a network of just $1 million in just 2 years of establishment, and then potentially it can become a $1 billion in the next 10 years. Imagine you invest where they were just $1 million company and learn and all. Imagine what your investment will become when they have a net worth of $1 billion in value. You see that now. So you must not be carried away by the net worth of a company or of a stock. Also check their potential availability of growth. So invest in growth, not in net worth. Also, don't invest in products, invest in ideas. I know that many people will still find this very weird. Well, what do you mean by investing in ideas and not the product? Well, sometimes the products you want to invest, or what move you to invest in a product or in a company, is because of their product. You may not be doing everything wrong, but sometimes that's not the best way of investment. The idea behind their product is much more important than the product, because similarly every product have its own competitors. There's competitions in every business. So the idea that give birth to the product will actually make it more valuable than the product itself. You have you have many companies that are similarly doing beverages, but sometimes the idea of each and every one of them are actually different from each other. So if you are a person want to invest your money that will give good returns, look at the idea behind those products. There are many football clubs and there are many of them that are on the stock market. And then if you want to install or you want to invest your money, you don't invest because all of them play football. You invest in the idea, because there are many football clubs that have greater ideas and they have potential value than each other. So it is idea that is more important even than the product. Sometimes the product may fail in the market, but the idea can reproduce, reinvent, and reevaluate the product again to become the best version that the people will buy and will make a loss of sales. So don't invest because of product. Product may die because of competition or one way or the other, but the idea can re-evolute, can reinvest, can reintegrate, it can even redo the product again and again until people begin to accept that product the way they want it. So idea behind the product is much more important than product. So if you want to invest today and you want to invest because of product, that will be a wrong thing in at a level. So you must find the idea behind why they are having that product. So if you can't find the idea, then you have a little work to do to understand what the idea behind every product before you invest your money inside. Number four, don't invest in productivity, invest in sales. I know that's a little bit straightforward and some people a little bit confusing, but I will explain. When you want to invest your money, don't invest because a company or something is productive. That's a good in one hand, but invest because that thing makes sales. I know it sounds like you are somehow being selfish, but no, that something is productive does not mean that it will sell. So when something sells, that means it's worth attention or being investing. Sometimes when we check our productivity, we believe that something automatically should sell. But on many occasions, we are actually wrong because that something is productive does not automatically mean that it will sell. So when things sells, it means that people accept it. When things have much sales, it means that people love it. That is why when you see many great investors, they don't invest in your company or your startups or anything because it look more productive or it look more enticing or it look more of a good business idea. They don't actually freak out by the productivity. They are freak out by people accepting it because the idea of every business, every startup, anything is that people accept it. So when people accept it, it means that it has more sales, it has more value and people love it. So don't invest your money because a company or somebody is productive. No, you should invest your money because that thing makes sales. And that means that no matter the money you invest in, you are going to have your return on it because sales actually is major way that money come back to a business because when a business is running without sales, it actually go bankrupt and everything dies. So don't just put your money because a company or something is just productive. Put it because people accept it, because that is the larger scope of anything that is worth investing in. So learn to check, is this thing making sales? If not, I will advise you to withdraw. But if it's making sales, that means people accept it, then it's worth putting your money into. Number five, don't invest in bigness, invest in startups. You see, one of the major problem we have with many investors is that they want to invest in things that are being established, in the bigness of its establishment, but we oftentimes neglect startups. That is why when you meet real investors, they don't actually tell you what they invest money in. You know why? Because they know that when you want to rush in, and many investors, they invest in startups because that is where the major money is. Imagine you put your money in a stock that is just maybe $2 per share or $1 per share, and your money is just there probably for 5 years, and before you know it has become almost like $2 per share in 5 years. Look at the range between $1 per share and $200 per share. That is a very vast range. You see, venture capital is one of the ways that, although because it carries more risk, and then startups sometimes oftentimes fail. So people don't want to bear that risk, so they put their money in things that are already established. And I understand, but sometimes a good investor learn how to invest in startups. When things just start growing, start booming, that is the better and the best way of investment, because at that point you have a larger, if that thing succeed, you have a larger stake and larger percentage of that stock when it was nothing. And then when it becomes something, you have a lot of things to cash out on. So I will tell many investors that don't be afraid in when it comes to venture capital, don't be afraid when it comes to investing in startups. I understand your own diligence is to understand who start the company, what is the idea, what is the vision, what is the idea behind the vision, behind every product services, what they have to, what their projected value in the next 5 years. Where you can get all these things done and you can move with it, then go with it. You will have more money in returns than just putting your money in a already established company whereby your money does not even yield more ROI as it is if you have put it in a business or in an investment that just a barely starting up. I know the risk is high, but sometimes those are the risks many major successful investments bear that make them become more wealthy in investment or wealthy in venture capital. So if you want to invest, don't put all your money. Maybe that's the best way. Don't always put your money in big establishments. Also learn to put your money. Let me say, also learn to put certain money aside for big risk, and those money should go to startups. We call them venture capital, and you can do it as well. Number six, which is the last one, don't invest in value, invest in solution. I know that many people will be looking like, what do you mean? Is value not something? I understand. Sometimes we always confuse everything as value. And I understand when something become productive, we see here and there, we also assume that this thing is providing value. But sometimes some value are vague, some value are not needed, some value does not meet people's standard, some value does not meet what people need, some value does not meet what people can accept, some value does not meet sales. And sometimes we call everything value. I will rather say you should invest in solutions because solution makes sales. Solution means people will accept it. If something becomes solution, people they don't accept it, they don't pay for it, they don't see it as needed. So when a value has become solution, at that point it has become acceptable, it has become needed, it has become something worthy of net worth, it has become something people want to use as a brand, as it were. So until what you are doing or what you want to invest in actually become a solution, I would say not don't invest in it. Let me just agree that it's at the value stage, but not the solution stage. And don't always mistake everything as value. Some things as just value, but they're not solution. People don't need them. You get it now. So if you don't do your due diligence on what you want to put in. Is this thing solving people's problem? Is this thing a solution what people need? If not, I will tell you to back off because your money is going to go down the drain. Because it is only the thing that people need that answer people's question that becomes solutions to mankind that people pay for. People don't pay for it because you call it value. They pay for it because you call it becomes their solution. So I believe that with this 6 point of mine, you have already know how to differentiate what to invest in and what not to invest in. And I believe that at the end of this video, you have already learned one or two things. Please do well to follow for more, subscribe, share, and comment whatever it is that become a little bit not understandable. And I will do well to answer your questions. Thank you. See you next time.